Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Millennial Mike. And this is a video series that we do for you almost every week where Mike goes through and takes your questions, comments, and then asks me to go a little bit deeper. So, Mike, thank you for going through all of these. And you're actually out on vacation. So, thank you so much for doing this for the audience.
Yeah, happy to do so. And like you said, I am on vacation. That's why we missed last week. I thought maybe the cruise would have good enough Wi-Fi, maybe not to do a Zoom call. So we have some questions this week on a whole host of different subjects: recession, rates rising, layoffs, all these different things. So we're going to start with a much needed recession. This is a comment that was left by Evan H. And he says, the world needs a good old-fashioned economic collapse and depression. Only personal suffering changes human behavior. Before that, only greed rules. It's human nature. Speaking of greed, I'll see you guys in a year or two after the real estate collapses and bottoms out. Until then, I'll be stacking cash and gold. So it sounds like he's pretty bearish on real estate, thinks we're foolish for finding a good deal at any time. What do you think of what he had to say, Mike?
Well, so I guess a couple of things. So first and foremost, I believe recessions are a clearing function for the economy. I believe they are required. They're kind of like forest fires. And unfortunately, um, we're going to go through I think, a pretty rough recession, certainly bigger than it would have historically been because we tried to ignore the 2019 when we were going to have one. And then 2020 came and we printed $8 trillion. So the first part of his comment, I agree with. I do not think a depression is coming. I think there's a lot of fear porn around that word. I mean, go look up what a depression is. I don't see that coming. The Fed knows how to defeat that. So I think a recession is coming. So I agree with that portion. I think it will be a bad recession. I think it will be a longer recession. So I agree with that. And I agree they're required. I don't like his anger at folks. It seems that he's kind of upset or angry with folks. I agree people were greedy. I agree people will have some pain. That's all good, but he seems very upset. And then he comes at me, not knowing anything about me at the end, saying, I'll see you in a year. I'll see you in a year. I'll be just fine. Putz. You don't know what I've set up in the debt structure and all of that. You want to compare notes in a year? Let's go ahead. Put some money on the table. It's fine with me if you really want to do that.
Mhm.
It's but if I step back and don't take it personal, I think he's right. I think there's some pain coming. I mean, Warren Buffett has the greatest sayings. I mean, when the tide goes out, you see you swimming naked. And I promise you, there are real estate gurus, there are social media influencers in real estate that will be caught swimming naked and will go bankrupt. It won't be myself. We've documented what I've done the last 18 months on this channel and documenting what I'm doing now. Sorry, buddy, not happening. But if you look at others, yeah, I think I mean, he's just mad. I don't know why he's mad.
Mhm. Mhm. Well, it seems to me that a lot of the bitterness that I kind of read through some of these types of comments comes from people who want to buy real estate, but for whatever reason, they've decided it's not the right time. It's not going to work for them. Rates are too high, prices are too high, deals don't work. And so they've made the decision for themselves, now's a bad time to buy real estate. And then when they see someone saying something to the contrary, it's like a little thorn in the side of their decision. Oh, what if I'm wrong? Well, instead of admitting you're wrong, maybe it's a little easier to just tear somebody down. That's sort of what I see with a lot of these comments.
Yeah, I think you're
Um,
giving him a way out. I don't think so. I just think
no, no, I'm being too
I think
nice.
he's yeah being too nice. Look at you being too nice. I thought I was the nice one.
Alrighty. Okay, hold on. You and Dion, here's another angry commenter. You and Dion recently made a video about rates going to 10%. And in that video, Dion stated interest rates go up 1%. Buying power comes down 10%, but demand can increase. YouTube user Izet Salebajovic, if I said that right, asks, what? How? And Zuber agrees? Oh my God, I thought he was an economist. So, Mike, can you elaborate for us how interest rates can go up 1%, buying power can come down 10%, but demand can still increase?
So what I was really pointing out there is basically supply is the missing piece for her, right? What is happening now is supply is going down. Because I think what she's referring to is a conversation D and I had basically how prices go up. And that doesn't make logical sense, right? Because we've been told, right? Meet Kevin says it all the time, right? Rates go up, purchasing power comes down. He says 9% now. Let's call it 10%. Well, guess what? Interest rates are up 4% now, and prices aren't down 40%. And they're still up year on year. There are some cities that are coming down, and there will be pain in iBuyers and in all those areas. Real estate is a supply demand function. It is also on the hierarchy of needs, right above food and water, or yeah, water and food is shelter. And then we have supply lock in. We just have all of these other functions. So yes, rates going up can cause supply to come down, hence demand stays above supply, right? So demand comes down, but supply comes down further, and you still can get prices. This is what I'm calling. I'm calling national prices basically flat and boring for 5 years. And that's why we're going to do 3.7, 3.8 million transactions. If you want to tell me that we're going to still do 6 million transactions like we did in 2020 or 2021, then you're absolutely right. Prices have to fall. But that's not what I'm saying. I've been saying for 6 months, transaction crash is where the money is. And I was right. We're going to go sub 4 million. Unfortunately, the only things they're going to trade are must sell or must buy. Who are they? Some people have to sell: death, divorce, job transfer. I would tell you some of them will just make them renters. We're actually seeing more and more homeowners. Like if you got to sell your spot in Fresno and you're going to move to Texas, maybe you'll rent in Texas, but you'll also rent your Fresno place because you got a 2.8% mortgage. It just makes financial sense. Then there'll be the must buy, right? I just turned 31 or I'm downsizing or whatever. The transaction volume is going to go down. Inventory is going to be moving very slowly. So prices are going to surprise to the upside. And I would argue that people should be mad that prices aren't down more given all the fear porn that's been out there, right? Interest rates are up 430% or 430 basis points, and prices are down 5%. I mean, and people were promised. They were promised rates go up 1%, prices must fall. Sorry, folks, that's not how it works.
Yeah. So the crash, their comment to you would be, well, it's still just coming. It's all just pent up. It's gonna come at any minute now. And it sounds like a bunch of banks flooding the market with shadow inventory that never happened.
Yeah, I mean, if you tell me we do 6 million transactions next year, I'll tell you we have a housing price crash. But again, I'm calling for like 40% less than that. So yeah, it's unfortunate that people want prices to fall because rates are up. And I'm sorry, they're not. They're just not falling as fast as you all want.
So continuing with the discussion of rates increasing, and I don't know if you've covered this, I've been out of the loop for a few days. So the Fed just raised basis points again, 75 basis points for the fourth time in a row. It's a historic thing, never happened before. Now, you have been calling repeatedly for the Fed to kick the market in the teeth. They need to go hard and heavy. Are you happy with this, and what should they do next?
So yes, I was happy. Well, so let's actually tell the full story. So on Wednesday, they released a statement along with the 75. So I'm happy with 75. The statement was kind of soft. In economic speech, it was dovish. Did not like that. 30 minutes later, Powell comes out and kicks the market in the nuts. We are going higher. The SEP from last month is wrong. We're going to go up. We're going to do this. We're going to do that. So right now, the Fed is telling us we are going to go higher. And again, I've been calling for a couple of weeks now, 5%, not 4.6. I now fear that they're going to go above 5. So they're going to go higher. They are going to go slower, but I've been calling slower as well. They won't be doing 75 points forever. The question is, what will December be? And right now it's 50-50. They are going to do 50 or 75. It will be all based on data. We get CPI next week and we get jobs and CPI in December. I don't think they've decided yet. And then what will they do in January or February, whenever their first meeting is? I believe they start cutting down in February. So my guess right now is they do 75 in December, 50 in January, 50 at their first meeting, 25 at their second meeting, which will take us to 5.25, which is above my 5. So that's where That's what I'm guessing, November 6th. I could change my mind tonight.
And do you think that that is a good strategy, or do you think they should still come in more hawkish, or is that still being too dovish?
They do 75, 50, 25, I'm happy. If they do 50, 50, 25, 25, I'm not as happy. It's the same numerical number. It's just longer.
Mhm.
Mike, what kills me now is long. Like people don't remember this, but Greenspan raised rates 17 times in a row at a quarter
Right.
point. It's excruciating.
Mhm.
I want to get to the peak. They call it the terminal rate so that the market can reset and we can find out who's naked and then we can build from there. Right now, if we go 50, 50, 25, 25, it's just 5 more months of pain.
Mhm.
I would rather be done in February. I mean, so we'll see. Part of me thinks they're going to go slow. So part of me thinks they're going to go 50, 50, 25, 25. I just hope they don't.
Mhm. So just rip the freaking band-aid off already.
Already, I've been calling for that 6 months. Just get it over with already. I don't like the spanking. Stop.
Yeah. All right. Well, back to more frustrated commenters, the spicy guys. This topic is doing the work. Some saying is just a trope, bit of a fairy tale sentiment. Sanchez says, what this guy, Zuber, never tells you is that he doesn't buy retail. His do the work slogan means research and find properties that are distressed and lower priced. So, of course, he's not exposed to declines because he's buying at a big discount up front. But to buy retail now from the MLS, you will lose value. So he doesn't think you can do the work on the MLS. It's just a fairy tale.
Believe what you want. It's fine with me. I just bought a deal on Monday. I bought my first deal on the MLS in 3 years, right out of the MLS. Everybody could have seen it. Nothing special. It just met my criteria, and I bought it for 27% less than list price. And I'll be documenting the full story on my channel. So you
Mm.
believe what you want, buddy. And I've never said pay list price. I think if people follow my channel, I say write only great deals. Don't pay list price. Don't play closing costs. Get rates, buy downs. Do everything you can to maximize the yield. Don't pay list price. If you're paying list price, you're not following what I teach. So, if you don't want to do the work, it's fine with me. You want to create excuses, it's fine with me. There's nothing that I do that somebody else couldn't follow. This property I bought was available to everybody who looks at the Fresno MLS
Right.
for weeks.
Yeah. To continue and build off of your point, I bought properties off of the MLS as the market was still going up back in 2020 and 2021. I bought properties right off the MLS and was able to get them to come down off what their list price was before that was a trend. Why? I did the work. I used inspections and things like that intelligently. You have to know your market and know what you're getting into. So if you don't do the work, if you just write it off, well, you're going to miss the opportunity to make those things happen.
Yeah, and I want to say if you're writing offers at list, like if you go into the MLS, like I told a story, I think in my first book of Buddy who saw what Olivia and I were doing. He asked for a referral to Fresno, which I always give. He went down with an agent, saw 3 properties, wrote 2 offers, and bought a deal. I'm like, are you kidding me? That's not how this works. Why are you paying list price? I mean, what are you doing? So I've never said pay list price.
Okay, let's see here. So, when will the money printing start again? Theta Hedge Capital says, I'm pretty sure Congress will be firing up the printing press soon. Those that own assets will be in a much better position. And your response, in typical Zuber fashion, was yes. You want to
Yeah.
elaborate?
Well, I think there's a couple of things. So first off, what I was responding to yes there is owners of assets win. If that hasn't struck anybody by now, you're not paying attention. Owning assets is the key to wealth. It's the key to financial freedom. If you get assets that produce income, all the better. Um, you don't have to look very hard. People who own assets win. Second, the first part of his comment I disagree with. I believe what happens on Tuesday is the Republicans win at least one of the House or the Senate or both, and we get 2 years of nothing after that, right? We will get Washington, D.C. gridlock, which will be great for the economy. We will stop spending money, and the government won't be spending, there won't be more stimmy checks or anything coming. So I disagree. I think the stimmy check era is over as soon as Tuesday.
So I was cutting out a little bit. Sorry about that. I missed some of what you said, but I'm sure it was a great response. I'll get you another question here. So somebody's on the topic with no forced sellers without layoffs and unemployment rising. Sean Smith says he's got a counterpoint to one of your arguments. He goes, in 2006, 2008 was a depreciating market, well before mass layoffs and mass foreclosures. Yes, forced sellers won't happen without mass layoffs, but lower volume of transactions is a deflationary environment. Could we see the crash and then see the layoffs?
I mean, anything is possible, right? We are certainly in interesting times. It's not what I'm calling for. Again, I think what we are already experiencing is layoffs. I think we started with finance layoffs, right? We had all these mortgage brokers and non-QM folks lay off. Now we're seeing tech layoff. It's kind of exactly what I called, right? We had Stripe, Lyft, Twitter just last week, and a lot more coming in the next 6 to 8 weeks. So no, I think we're gonna have. I think it's layoffs first. I always think it's layoffs. It's because again, you got fixed rate debt. 98% of people sitting on fixed rate debt. 80% people below 5%. It's only layoffs that's going to create the forced sellers. Could it happen another way? I don't know. Maybe, but I don't see it.
Yeah, Mike, I think the internet's cutting out a little bit here for me, so I'm going to have to just cut this one short. I had a couple more questions for you, but we'll just have to get to them another time. All right.
Sounds good.